Welcome to Looking at the Markets with David Modell. Today I just wanted to give you a brief introduction to Bollinger Bands and Keltner channels, which are rather similar, but there are differences. And I just wanted to point out the similarities and differences and how you can use both of them. So right now I'm going to go to tradingview.com. I like stockcharts.com. I like barchart.com. And another one of my favorites is tradingview.com. These are all free to use right now, so why not use them? And if you have your own trading platform on your broker, you can certainly use that as well. You just have to make sure you find something that has Keltner channels, Bollinger Bands, and all of your favorite indicators. All right, so I've got an Apple daily candlestick chart up here. And I'll just show you the candlesticks. Here they are. All right, this is about 8 or 9 months worth of price action, and these are daily candlesticks, meaning that each candlestick represents 1 day of price action. All right, so first we'll start with the Bollinger Bands, which are the more popular one. Between Bollinger Bands and Keltner channels, I would say Bollinger Bands are more popular. And one of the reasons they're popular is because Bollinger Bands have the ability to squeeze and then expand, or squeeze and release. And so let's take a look. Bollinger Bands have a midline, okay? And that is basically just the 20-day simple moving average, the midline. And then you've got the upper band and the lower band. The upper band is two standard deviations above the midline, and the lower band is 2 standard deviations below the midline. And that's why you've got the 20 and the 2. And the close, meaning they're using the closing prices to calculate all these things. All right, so it's pretty simple in concept. What I do like about the Bollinger Bands is that you can use them as a buy and sell signal if you want to. Some people will buy a stock when the price closes below the band, the lower band, and then other people will not buy until it not only closes below the bottom band, but they'll wait until it then goes and closes above the lower band. That's another way to do it. What's good about that method, waiting until it closes above the lower band, is that now you've got a little bit of confirmation that at least it's not in a downtrend anymore. If you buy it right after it closes below the bottom band, then the problem with that is you might be catching a falling knife. You're buying it while it's falling, sometimes when it's falling fast. Whereas if you wait until it closes below and then closes above the bottom Bollinger Band, then at least you've seen a change in direction. It could be a head fake. It could keep going down. It could create more lower highs and lower lows. Yes, of course. There's no perfect indicator, and there are no guarantees in trading or in the stock market. But at least you've got a temporary change in direction. And so in this case, if you waited until the candlesticks clearly closed below the bottom band and then closed above the bottom band, and then didn't sell it until it closed above the upper band, you would have enjoyed some profits. All right. So that's one way to trade it. And then some people consider if it closes above the upper band and then closes below, they could consider that a time to sell or even a time to short. Although short selling is a more dangerous game than just going long. So be careful if you're going to use the upper band as a shorting signal. All right. It may be safer just to use it as a signal to sell if you already bought the stock. And this works not only for stocks, but for commodities, currencies, cryptocurrencies, and so on. All right, so those are Bollinger Bands, and I want to talk about the Bollinger Band squeeze when the upper and lower band get really close together. Oftentimes that indicates that a big move, a big breakout is going to happen. It could be a break up or a break down. All right, breakout or break down. You don't necessarily know which way, but you know that if it squeezes like that, a lot of people would say that a big move is about to happen, and it happened here. All right, you had a squeeze and then a release, okay? Because it's very tense here. When the upper and lower Bollinger Bands are very close together, that means that it's probably been going sideways for a while. And so the tension is building, and then release of the tension. Finally, it breaks one way or the other. In this case, it broke down. So some people, if you're in options trading, some people will actually consider buying a straddle or strangle when there is a squeeze there in the Bollinger Bands, because you're expecting a big move and you might not know which way it's going to happen. All right. Another example, you've got something of a squeeze here, not as much though. I don't see any other huge squeezes here. This is the best example of a squeeze right here. Actually, here's another one. All right, there's a Bollinger Band squeeze. It stays squeezed for a long time, and then finally, boom, the breakout, the release, and then the Bollinger Bands expand there. All right. So let's compare that to, these are Bollinger Bands, let's compare these to Keltner channels, which are similar but different. Notice that Keltner channels don't really have squeezes and releases, not in the same way that Bollinger Bands do. They really squeeze and really release, okay? So for options traders, Bollinger Bands may be better for that sort of thing, the squeeze and release play. Now, if you want something that's a little steadier, maybe you're not into the really narrow channels and really wide channels. Maybe you want channels that pretty much are steady as far as the width, okay? Then Keltner channels would be better for you in that case. And that could be an advantage, because with the Bollinger Bands, if you're waiting for let's say the Bollinger Bands are really wide. Okay, then if you're waiting around for a candle to break above or below, you might be waiting for a long time. Okay, because the bands can be really wide. You don't get as many opportunities when you get these wide bands. It's very difficult to get a break clearly above or a break clearly below. Whereas with the Keltner channels, since they're not as wide, you might get more opportunities to trade if you're waiting for a close below or a close above. All right. Now, some people actually put both. They'll put both up, the Keltner channels and the Bollinger Bands. And by the way, I've got the Keltner channels also on 20 and 2, just like the Bollinger Bands, 20 and 2. All right, so I've got both up here, and it may be confusing looking, all right, but it is interesting. You can actually put both up there, and you could have a strategy where, you know what, I'm going to wait until a candlestick closes below both of them. And because sometimes the Keltner channels are further out, and sometimes the Bollinger Bands are further out. All right, and so it could be a very conservative strategy where you're going to wait until it closes below both of them, and then you get some real confirmation there. All right, or you can wait until it closes below and then above, just like with the Bollinger Bands. Okay, and then to sell, you don't sell until it breaks clearly above both of them. And you don't know which one it's going to close above on any given day, because again, sometimes the Bollinger Bands are further out, like here. Sometimes the Keltner channels are further out, like here. It is interesting that sometimes you get the Bollinger Bands inside of the Keltner channels, like here. You got the Bollinger Bands here, and the Keltner channels further out. Further, the top band is further up, and the bottom band is further down. That's a real squeeze. I mean, look how tight that is. When the Bollinger Bands are actually tighter squeezed than the Keltner channels, that's a real squeeze. And then you can see that squeeze is likely to release. We may not know which direction, but we saw a big move up after this pretty tight squeeze here, to say the least. And so if the Bollinger Bands go inside of the Keltner channels, that could be, for options players, a real opportunity. All right. So that's my quick primer, my quick introduction. But yeah, with the Keltner channels, it's the same ideas. You got the midline, and you got the upper band and lower band. It's very similar. You just choose which one you like better. Whether if you want to go on the wild side, okay. If you don't mind something that has, it gets really narrow and really wide sometimes, you can go with. Look how wide this is getting here. It's hard to trade sometimes when it's really wide. All right. And it can be confusing. If you want something that's a little more conservative, just easier to handle, notice that it can get wide, but not as wide. It's more steady with the Keltner channels. And sometimes people even put both up there, just for confirmation. All right, I hope this was helpful to you. If you want more help with indicators, trading, investing, you really need to have a trading or investing plan. If you don't, then you're just setting yourself up for failure, really. So you can contact me anytime. by email. My name is David Modell, and my email address is davidmodell, Moadel, @gmail.com. Thanks a lot, and please give this video a thumbs up on YouTube, and leave a comment and subscribe to my YouTube channel. All right, I really appreciate it. Thanks a lot, and I'll talk to you again soon.